The Rebel Capitalist Show.
Okay, let's talk about China's central bank digital currency that they rolled out. It's I've got it written down here, the DCEP. It's basically the digital yuan. And I did a video on it yesterday. It'll be out tomorrow night. And I kind of tried to think through this. And the more I thought it through, the more I kind of had a light bulb moment and thought, you know what? Not short term, but long term, this could really cause some problems for a couple different groups. Number one, the U.S. dollar, the reserve currency, and the infrastructure, because it's all about the infrastructure, not necessarily the green pieces of paper. And then also for Bitcoin. And I want to be very clear. I'm very bullish on Bitcoin on the price. I think short term there's a lot of emotion, let's say.
Just a little bit. Just a little bit.
To say the least. But long term, philosophically, I am all about Bitcoin. I want it to succeed. But when I look at the network effect that the Chinese digital currency could have, unfortunately, I think it could really give not only the dollar, but Bitcoin a run for its money. And so I want to get your thoughts on that, and then maybe I'll expand on my whiteboard video.
Well, can you tell me why you think that? Why do you think that this is, what's so revolutionary about it, or what's the infrastructure, or why do you think this could be disruptive? And then maybe I can answer the question a little bit better.
Okay, so first and foremost, the central bank has an infinite balance sheet. Any central bank, so they can extend credit. So if everyone has a bank account with the PBOC or the Fed, for that matter, and people, I think, get hyper focused on just the Chinese citizens or just Americans having an account with the Fed. But I don't see why there would be any reason why all of these countries they do business with in Africa or South America or on this kind of One Belt, One Road initiative couldn't download the PBOC app and have an account with the PBOC, and you're kind of cutting out the commercial banking system and allowing the PBOC to create their version of bank reserves and turn those into legal tender. And we're talking stimulus maybe, or even extending credit to corporations in Africa. So if you're an African corporation and you've got the choice, and you've seen what's happened recently with the swap lines and the dollar shortage and that bottleneck. And as you know, it's not just about the Fed setting up a swap line. Well, it's still about the commercial banks. They still have to extend those loans. And if you're a corporation, say, okay, well, the next time I get into a problem, we have the next cerveza sickness, I don't have to rely on the commercial banking system and the Fed, because the PBOC can give me the liquidity I need directly. And they have an infinite balance sheet. They can take, they can have negative equity. They can take a haircut. So it's a completely different type of system. Then also you have the demographics in South America and in Africa being very, very young. So if they start to adopt the digital yuan as a payment system, just going back and forth on their cell phones, then you have that network effect. So you've got cheap credit, you've got the flaws with the dollar system and the commercial banking system in their eyes. These are their words, not mine. And so I think that could add to that network effect to give them a big head start. And then you combine that with all their foreign direct investment, with all these emerging markets and the One Belt, One Road, and I think you could have that Facebook network effect with India, Eastern Europe, the Middle East, Africa, South America, and China.
Yeah. So I tend to agree with everything you've said. It's all about the distribution system as opposed to, whether it's digital or whether it's not, right? I mean, currency is largely digital already, right? Not too many people actually walk around and pay their bills, at least not big bills, with physical currency. So the digital aspect of it is, to me, is not that revolutionary, but the distribution system, having the account directly with the central bank, that's the revolution, quote unquote. But what I would say is, not to say that you're wrong, because I think you're right. If enough people were to adopt that, enough countries or people or individual corporations were to adopt that, they could certainly do it. But you have to remember that this would be done in yuan. It wouldn't be done in dollars.
Right.
The PBOC is not issuing dollar credit through their central bank digital currency, right?
Yep.
And so all of these people that are adopting it would have to accept the fact that they're going to be compensated in yuan. And I just don't think that people and corporations and countries around the world want yuan. The only place you can use it is in China. Now, China is becoming increasingly important. It's a huge economy and but I don't see people rushing out to redenominate their contracts and their payments into yuan rather than dollars. And I don't see foreigners rushing to sell their product to the Chinese in yuan rather than dollars. The reason they want dollars is because they can use dollars anywhere in the world. They can't use yuan anywhere except for China.
Right.
And this is why it's so hard to unseat the global reserve currency. Forget whether the dollar is the global reserve. Forget about the United States. It doesn't really matter. It's just very hard to unseat whatever the global reserve currency is because of the networking effects that you're talking about. It's very hard for one network to take on another net. The first mover advantage is huge, right?
Yeah, right.
The other thing I would say, this is where I think it gets really interesting. And when I talk to people about these digital currencies and the Fed dollar and the Euro dollar and the Chinese digital yuan, it's often brought up in the context of this is another MMT program. It's the marriage of the Fed and the Treasury, and they're just going to use this to get the money to the people. We're going to have high levels of inflation, and the dollar's going to go to zero. Now, when the Fed does it, it's viewed as a negative, and the dollar's going to zero. But when China does it, it's this revolutionary thing that's going to allow them to take over the world. Now, it's the same thing. Why is it a positive for China but a negative for the United States? In other words, I guess I would say is if people start to adopt this Chinese digital yuan,
yeah, right,
they don't have a monopoly on that technology. A few months later, Powell comes out and Yellen come out with the digital dollar, and they have the. So why wouldn't that allow them to reinforce the dollar as the global reserve standard or global reserve currency and just push the Chinese digital yuan to the side again?
I think you could have this competition going back and forth, and what network prevails. Yeah, I don't know. Obviously, the dollar in its current form has a huge head start. Yeah. But going back to what you're saying about MMT, that's how I kind of saw it as whichever central bank wins, if a central bank does win, they can do MMT throughout the globe. And if this is a big if the MMTers are right in the sense that as long as you increase productivity along with the increase in the money supply, you won't have inflation because you'll be creating just as many goods and services to keep up with the increase in the money supply. Now, that's the trick, of course. But if you can do MMT in Africa, in South America with your yuan or with dollars, then you could see this type of MMT nirvana, let's say, where global growth is being increased while at the same time the digital currency is being increased as well, the supply.
Listen, I already know how this is going to be received, and I know people are going to laugh and they're going to say, "Oh, geez, here goes Brent again." But that's kind of part of my milkshake argument. We're going to get MMT in the United States. We're going to get this digital currency in the United States. You and I, we're all going to have accounts with the Fed. Now, whether that's 6 months from now or 2 years from now, I don't know. But that's coming down the pike.
Yeah, I agree.
To think that's not coming, you've got your head in the sand. And so I'll go back. If this is such a revolutionary, great thing for China, and it's going to be positive for them, well, why can't it be a positive for us? And if it does lead to this short-term sugar high, this monetary nirvana where, you're increasing the money supply, but productivity is going up even more, we can get this great growth. And if the U.S. kind of takes off as a result and everybody needs dollars anyway, and wow, why don't I just go invest in the United States? They're doing a $10 trillion infrastructure product. They've got Facebook and Google and all these other great companies I can buy into. And I want to go invest in that. Well, I got to have dollars to buy. I got to have dollars to invest in that. And that's where I think it's possible. And again, I don't know that this is going to play out, but that's part of my theory is that I think it's possible that we get into this scenario where the U.S. is outgrowing the rest of the world. And as a result, it creates this vicious cycle, or this vicious circle where it pulls even more capital in. And the other thing I want to say about the whole global reserve currency thing, and again, I know how this is going to be received, and this is not necessarily something that I like, but it's just reality. I think a lot of times when people talk about the global reserve currency, they think of it from an economic perspective, right? And it definitely is. That's a very important way to look at it. But the political reality of it, and the global reserve currency is not about economics. It's about power and the ability to extend power around the world, right, and to force relations on your own terms. And as long as the United States is the global hegemon and the biggest power in the world, we are not going to lose the global reserve currency unless we want to, unless we choose to do it. And if you can find anywhere in history where somebody has willingly given up the global reserve currency, where it was given away rather than taken, then I'll buy you a beer. But I can't find anywhere in history where anyone has willingly given up that power, because it's an incredible tool, right? And so, I've heard these arguments, well, it's no longer in the United States' best interest to have the global reserve currency. It's not necessarily this advantage. It's actually a burden. Well, maybe from an economic standpoint, but from a political standpoint, it is not. And from an ability to project power around the world standpoint, it is not. And so, I'm not, and then people say, well, the U.S. hasn't won a war in 50 years and we're a declining empire. And, I would suggest if you think that the United States is a declining empire, I wouldn't argue too much. But if you think that we can't win a war, I would suggest going and asking some of these countries that we fought over the last 50 years and the family members of the foreign soldiers who've died, whether or not the U.S. has any power and has the ability to wage war, right? And again, I don't like this. I don't prefer that but this is reality. Just look at all the different countries over the last 25 years who have, in one way or another, tried to challenge the U.S. dollar hegemony, or tried to price their oil in something other than dollars, or tried to issue some kind of a new currency or create a new currency block. And those leaders just don't exist anymore. They're gone. And I don't like it, but that's reality, right? And I think that that's something to consider when you consider the loss of the global reserve currency status.